Forex video. In this video, we're going to be going over the key concepts of fair value gaps and liquidity, two of the most prominent and often misunderstood concepts in the ICT world or the ICT realm. Okay, so to begin, we're going to be going over fair value gaps specifically, right? So here we have in front of us a chart of the GBP USD, so the pound against the US dollar here on the weekly time frame, right? So the first thing we're going to do is we're going to understand fair value gaps and what they actually represent to us as an analyst and also on the lower time frames as a trader, right? So over here we can see we have a fair value gap that's been produced in this range over here. So this is our first fair value gap over here in price. Now, what is a fair value gap, right? So we need to understand a fair value gap is where there's been an imbalance between buyers and sellers, pretty much, right? We see inefficient price action in the sense that this candle's wick has not touched this candle's wick over here, right? So this is our fair value gap, and it's something that we're going to have to use to our advantage when understanding price's behavior, right? So we typically draw a rectangle which represents POI or point of interest, or simply just a fair value gap, right? And fair value gaps are used to identify points of interest in the market, right? So what is a fair value gap, right? So we've just discussed a fair value gap is essentially where buyers and sellers have not been given the same price, right? So we see not same price, we see buyers and sellers have been, the delivery between buyers and sellers has been inefficient, right? So this is an inefficiency in price, or simply just a fair value gap, an inefficiency in price or a fair value gap. So what does this represent from an ICT concept, right? So when we see buy side delivery, so I'm just going to bring this down for a second, right? And when we're in a bearish market over here, we're often going to see a fair value gap somewhere around this region over here. This is going to be our fair value gap. So what does a fair value gap tell us as a trader or as an analyst first, right? When we see a fair value gap, we understand that there's been an inefficiency in price action over here, right? So this is an inefficiency. I'll just write inefficiency for short. Inefficiency for short, right? So when we see an inefficiency in price, right, we see that there's been an imbalance between supply and demand, or buyers and sellers, right? And also from here, we understand that the buy side delivery has two main objectives. The first is based on fair value gaps, right? So we're going to see price give us somewhat of a correction up to this fair value gap over here. This is one of the reasons why price moves up before it moves down, and that's exactly what we've seen here on GBP USD. Price will move up before it moves down, right? And one of the reasons it does that is to fill the inefficiency or the fair value gap that's been marked out here on the weekly time frame. This is the weekly time frame, right? So we need to understand that this fair value gap will have a significant weight on price, and we may see price sell off for weeks and even months, right? So this sell off over here lasted weeks, if not months actually, I believe, or even a year, a long time, right? Because it's a weekly fair value gap, it holds significant weight in the markets. So we need to understand, when we see a fair value gap, our job is to understand price is going to rebalance at some point. So this here is essentially a rebalancing act. This is a rebalancing act of price. Rebalancing of price, rebalancing of inefficiencies. This is one of the reasons why we see buy side delivery. This is buy side delivery over here. This range, this movement over here is buy side delivery. Okay, that's the first reason. And that's why fair value gaps are so important. A fair value gap is an inefficiency in price, and price will look to rebalance that in the future before continuing lower. Vice versa, if we're in an uptrend, we're going to see price give us a movement like this, and we will see price eventually come back down slowly before heading upwards again, right? So we're going to see a fair value gap here in this region. And this fair value gap represents, again, an inefficiency between buyers and sellers, right? We see price displacing, giving us that inefficiency, right? That buy side inefficiency, and our job is to understand price is going to rebalance at some point. Now the rebalancing in price is what we're after when we're trying to find a fair value gap. Where is price likely to turn? Where are these turning points going to be? Here and here, in line with what we see here on the charts, right? On the charts, we need to understand that this is a rebalancing of price, and this is what fair value gaps represent, right? A rebalancing of price. Rebalancing in price. So if I just label that for everyone, this is a rebalancing in price at the fair value gap. So that's the first reason why price will move up, right? This is the first reason to understand. Now, the second reason, if I just make the screen a little bit clearer, the second reason to understand is that price is going to sweep liquidity. And that's the second reason. That's another reason why we're going to see buy-side delivery. So this over here is buy-side delivery. This over here is buy-side delivery. I'm going to label that, I'm going to make that green, right? Buy-side delivery. Now, when we have buy-side delivery in a bearish market, what we need to understand is that price is going to, one, fill the fair value gap, as we've established. But the second reason is that it's going to sweep liquidity. The market is always engineering liquidity. And in this schematic, we need to understand that we're going to see price sweep this liquidity, right? Oh, let me make that a bit clear. We're going to see price sweep this liquidity, right? So this is a liquidity pool, equal highs, equal lows, right? This is what we use to understand buy-side delivery. This is the second reason why we're going to see buy-side delivery, right? The first reason is to fill a fair value gap, but the second reason is to sweep liquidity, right? So when we look at buy-side delivery in a bearish market, buy-side delivery consists of two things, right? We're going to be rebalancing price or rebalancing the fair value gaps, which are going to be in this region over here, where the fair value gap POI has been marked out. The second reason why we're going to see price spool higher is because it's going to be sweeping buy-side liquidity, right? BSL, which stands for buy-side liquidity. And this is very often in the form of equal highs or upward sloping trend lines, but very often it's equal highs and lows. So if we go here in price, if we're going to look for an example of that, here we see a liquidity pool that's being represented by simply one structural high. So not equal highs, but structural highs. And this is what we see here in this region. This over here is a liquidity pool. It's on the weekly time frame. It is a structural high, and it is a weekly liquidity pool just below the fair value gap. A clear example I can give you is if we look at the next fair value gap, right? So if I get rid of this over here and zoom in, our next fair value gap is even clearer than the previous one. It's just over here in price. So if we draw our fair value gap, simply just a rectangle to represent the fair value gap, represent the POI, right? Inside, take that to the right. So if we see here, we have a nice, very clear fair value gap in price, clear as day. And so because of this, if we just go over to the left, we understand that the fair value gap has been respected, but what do we see? What's our second concept when it comes to buy-side delivery? We see a huge pool of liquidity in the form of equal highs over here. These are our equal highs. Equal highs. Now, our equal highs represent a liquidity pool, right? So this is how we use fair value gaps in conjunction with equal highs and lows, right? In conjunction with liquidity as a whole. Okay, so this is going to be our buy-side delivery going all the way up here in green. Now, this is our buy-side delivery. Buy-side delivery does two things, or it achieves two things, okay? So this is our BSD, buy-side delivery, and it achieves two things. It sweeps liquidity, as we can see over here, liquidity in the form of equal highs and lows. In this case, it's just equal highs. And it taps into a fair value gap here on the left, and that's what price has done. So when we identify our high probability fair POIs, it's essentially going to be one that leaves a fair value gap and has inducement. Inducement is simply liquidity that's dropped just below the POI in this case, right? So this is a form of inducement. Inducement. Now, this is inducement. Inducement is simply liquidity dropped just below a bearish POI. Now, if we were looking at a bullish case, we would see price engineer equal lows just above the POI. But this is a fair value gap, a bearish fair value gap. So when we see our buy side delivery, what we're essentially looking for is we're looking for price to sweep liquidity and fill the fair value gap, and that's exactly what we see over here in price. And this is how essentially the IPTA or the algorithm works. The algorithm for buy side delivery will hunt liquidity and fill fair value gaps. That's essentially all we're looking for when it comes to identifying our higher time frame bias, and essentially how the algorithm book on all the time frames, whether it's the weekly, the daily, the 4 hour, the 1 hour, the M15, the M5, the M1, even the 1 second. This is essentially how the markets book. Okay, excellent. So now we've been through fair value gaps and buy-side liquidity. You have to understand when price engineers buy-side liquidity in the form of equal highs. This is equal highs. Price engineers buy-side liquidity. But what else does price engineer right at the same time? For those who have a keen eye on liquidity and a sharp eye on liquidity, you should notice sell-side liquidity as well. This is buy-side liquidity in the form of equal highs. Sell side liquidity is also produced simultaneously during the buy side delivery. And here's where we see it. We see it with an upward sloping trend line with 1 touch, 2 touch, 3 touch, 4 touch, 5, 6 touches in price, right? So this is your classic trend line that was building for a very long time. So from March all the way up to March to the following year. So this is a huge trend line in price. And this is what we call sell side liquidity. Sell side, if I can spell sell side liquidity, right? Sell side liquidity. So when we see sell side liquidity being produced, we need to understand that we need to use everything in conjunction with each other. So because of that, what we need to understand is that yes, we've identified a fair value gap all the way up here. We've identified buy side liquidity to sweep, and once we've reached this zone over here, and on the lower time frames, this is where we look for a lower time frame entry, which is something we're not going to go over in this video, but I've made lots of videos on that, so please check that out, our entry models and AMD schematics, etc., how we enter the markets. But this is where we look for a lower time frame entry markets, right? Once we have our lower time frame entry, right, we need to understand we have a massive pool of liquidity to target, and that's in the form of a trend line, or trend line phantom as some people call it in ICT concepts, right? Trend line over here. Trend line offers us sell side liquidity, right? SSL. Sell side liquidity. So this is a quick overview on how we can use markets using simply the two variables of fair value gaps and liquidity, right? Two of the most powerful concepts that you can use together on all different time frames in your trading. Okay, so if we just go and dissect price further, we can go and highlight these concepts in a bit more detail, where now that we're in a region of price over here, we are trading between this high over here. So I'm going to use the Fibonacci tool or the Fib tool to get a clear reader price. We are trading now from this swing high produced in May of 2021 all the way down to this swing low over here. Now this swing low was produced in September of 22. So now that we have a structural high and structural low, we're going to be going over the same concepts again of fair value gaps and liquidity. Let's see how we can dissect fair value gaps and liquidity in our trading. Okay, cool. So where are the fair value gaps? Where is there an inefficiency in price? Here's one, right? I'm going to zoom in and we're going to go through this as well in detail. This is our first POI, or our first fair value gap, just over here. And why is that a fair value gap? Well, very easy to see. You need to train and you need to spot your eyes to see fair value gaps. This is what ICT does when he goes on about his rants and his tangents, and he goes off here and he goes off there. What he's doing is you need to train your eyes to catch these in price. You need to train your eyes to see fair value gaps, to see liquidity. And the best way to do it, honestly, yes, you can watch a YouTube video from me or from anyone else, but the reality is you need to get on the charts and put in your chart time, your screen time, and that will build your experience. And experience is worth millions. Nobody can actually give you experience, right? Experience is like, it's like time, right? You can't buy time. You know, you can buy a doctor, but you can't buy good health. It's the same thing here in the markets, where you need to put in the time and effort to understand and train your eye, train your mind to see these things in price, whether it's liquidity or inefficiencies. Okay, so here we see a very clear fair value gap, a very clear inefficiency. That's the first thing, right? So now that we're on the topic of fair value gaps and inefficiency, let's look where else we can see it. We see a fair value gap in this region over here. So if I clone that and put that in this region over here, we see exactly the same thing here being produced. We see another fair value gap being produced in this region over here. This is our fair value gap. And now we have one more fair value gap, I believe, all the way up here, very deep in the premium range. And this produces our third deeply priced premium fair value gap, or our POI, same thing, right? These are our points of interest, or our fair value gap regions, okay? Now the next thing we want to dissect is liquidity, right? Where are the liquidity pools based off this? Now again, when it comes to identifying liquidity, you need to put in screen time and chart time to understand. So I get a lot of questions, oh, what's the high probability POI? How do we mark out high probability POIs? What are the high probability POIs? When it comes to choosing your POIs, they essentially come down to these two things, fair value gaps and liquidity. Now in ICT concepts, we understand that buy side delivery would be based on filling fair value gaps from the past, i.e. this region, and this region. And we want to understand that price will spool, the algorithm will spool towards liquidity pools, right? So where are the liquidity pools in this region over here? Right, we see a trend line. Our first liquidity pool would be this trend line over here. We have 1 touch, 2 touch, 3 touch, just over here. So this is going to be our trend line. And we know that trend lines are simply a form of liquidity. And this is a higher time frame, so it has a lot of weight. This trend line has a lot of weight in price because it's on the weekly time frame. So this is a massive trend line that's been produced, right? So what do we see over here? We see price spool lower with a fair value gap, and price really did tank, right? This went down, I believe, even below or just above 1, even 1.03. We saw price tank all the way down, and now we see somewhat of a midterm correction as we come back up to this POI over here. So when we see buy side delivery, right, we saw a massive sell-off in this region, quite a significant sell-off considering it's the weekly time frame. This sell-off lasted approximately July to October. It lasted almost 3 to 4 months, right? 3 months, 4 months. So you have to understand why that's the case. Markets are not random, right? Markets operate on two things, like I keep banging on in this video: fair value gaps and liquidity, right? The first thing we want to do is we want to identify a fair value gap, which we have, but price is going to spool, filling inefficiencies, but also sweeping buy-side delivery before we see a minor correction. Now, some of you might be asking, live here on GBP USD, it hasn't really given a follow-through, right? We haven't seen price, follow through of this POI. We haven't seen price really get down there. Now, the question is, why do you think that is? Based off the chart, why do you think that is? If I stop talking for a second, why do you think that is? I want to give people a clue. Why do you think that is? Well, we have fair value gaps that are deeper in the premium. We have deeper premium priced fair value gaps. And this is another concept of the algorithm, right? Fair value gaps and liquidity are fantastic, but understanding where fair value gaps are in relation to the dealing range we're currently in. So our dealing range I marked out a few minutes ago, all the way from this high, right, down to this low. This is our dealing range, right? That's our dealing range. So we understand the higher we go above in our dealing range, the more into the premium we're going to end up. So we're going to end up in these premium zones over here, right? So this is my live take on GBP USD as this is being recorded in February. We haven't had a follow through with this fair value gap, which is kind of expected, right? Because we need to understand that if I get rid of this for a second, what do we have over here? Going back to our concept of liquidity, equal highs, right? Don't we have equal highs over here? Equal highs and another fair value gap. We're in an interesting region now where, following our rules and following how the algorithm actually works, it spools higher, targeting fair value gaps and liquidity. Our next target in the very long term, it could take 3, 4, 5 months to get up there, will be to sweep the liquidity we have over here and target this fair value gap, and that could give us a significant drop as well, just like this one. Okay, just like this move over here a few months back, last summer. Okay, so to sum up, let's have a quick summary of what we've been through, right? Buy side delivery, right? The same thing can be said about sell side delivery. It's just flipped on its head. So when we look at buy side delivery, what we're looking for is we're looking for two things. We're looking for the market, right? We're looking more specifically for the algorithm. When I say the algorithm, I refer to something called IPDA, the interbank price delivery algorithm. When I talk about algorithms, I talk about how price will do two things. It will spool towards inefficiencies to rebalance price, and simultaneous to that, it will sweep buy-side liquidity, right, in the form of typically equal highs and equal lows, or a real example on the charts, trend lines, equal highs, right? Those are typically the liquidity pools that you will see more often than not. Okay, so just one more to summarize, right? Buy-side delivery is going to be to sweep buy-side delivery, is going to be to sweep buy-side liquidity, often in the form of equal highs and lows, and a fair value gap will be used in conjunction with that to ensure price is rebalancing areas that have not been tapped into, that are left in inefficiency, i.e. this region over here or this region over here. Okay, so this is my kind of live outlook of GBP USD, as well as educating everyone on essentially how the algorithm works from a fair value gap and liquidity standpoint. So if you enjoyed this video, give it a like, give it a thumbs up, and I look forward to seeing you all in the next one.